right, so a bit after the open on Tuesday, and I'm trying to show all 7 markets that I post levels for, and I'm trying to trade all of them here in front of you, so the screen is a bit crowded. So upper left to right, we have the Euro, the Nasdaq, the Russell, we have the YM, then we have on the bottom there oil, we have S&P and gold. So I will show the levels a bit later as there is no room over here. So basically I post buy and sell levels for 7 markets. The blue lines you see are the buy levels, the red lines are the sell levels, and then you're going to see a dashed line, and that is the midpoint between the buy and the sell. So the idea is you want to be short below that midpoint for the price to head toward the sell level, and you want to be long above the midway point for the price to go toward the buy level and beyond. So those levels, the buy and the sell, these are just the initial prices that a market should go to. Most of the time, as you can see in a number of markets here on the short side and on the long side, very often price goes way beyond these levels. And the way I am being taken out of trades is either on a stop loss, if I get in the trade and the market moves against me and I am out, or I am trailing my stop, meaning I am trailing the price. I allow for the possibility of some big moves. And the way this works really, let's say I am short, but then price goes to, let's say, above the halfway point. I no longer want to be short if price goes above the halfway point, because then I expect the buy level to start pulling the price up, and vice versa. So this is all 7 markets. This is everything I post. So it's a bit crowded on the screen. I hope you can see at least some of it, but I am trying to show everything. Later on, I will show the actual alerts, these levels that I posted last night. I always post them between 6 and 9 p.m. Eastern after Globex opens. And I will show my rhythmic dashboard as well. This is a funded account, and it's all the same funded account. And I will show the totals and everything a bit later on. A bit after 10 now, so I got stopped on the Euro, the YM, oil, and S&P on the trail stops. Still in the Nasdaq, the Russell, and gold. Took a trail stop on the Nasdaq, so now all I have is the Russell and the gold, and as you see I am trailing the stops. These markets still move beautifully, not nearly as choppy as the Nasdaq or the S&P, so let's see how far I can take it. Alright, so here is my rhythmic dashboard, and I have these 2 positions open. Everything else was stopped on the trail. So just going to let it play out. Gold seems to be really moving nicely down, so going to continue to trail that stop. So the Russell got stopped on a trail, and now all I have is this gold chart. So I figured I'm going to make it nice and big so you can actually see what's going on. It was a bit tight over there. I'm going to really drag my stop down now. We are approaching this kind of a triple bottom now maybe. So there is a chance price is just going to bounce up from here, so I don't want to give back too much. So I'm just gonna kind of lower it here. Let's see if they can break it lower. I mean, if they can break it lower, we can go right, quite a bit below 2000. So let's see where it's gonna take us. Either they bounce up or they're gonna break right through it. So I'm gonna keep that. I want to give the trade a chance to breathe. I mean, there should be some kind of an attempt to bounce and go higher. I think it will fail, so I do want to give this trade some room to breathe. They're breaking. They are breaking. Here they go. So this support area, not really a support area, but there was kind of a double bottom there, did not hold. That's why it was a good idea to let this trade breathe, and here they go. So again, take a look at that dashed line above. Do you see that? That's the midway point between the buy and the sell. Look what happens to price once it starts trading below that halfway point. A quick acceleration toward the sell level. These levels attract price. You see it day after day, instrument after instrument. Look how fast price went to that sell level. And then look, came right back to it, right? Broke through, came back. Broke through again, came back. And then broke for the third time, and now just breaking down. So while the S&P and the Nasdaq are kind of in a range, this market is moving beautifully. All right, so moving my stop even lower, back to that former support area. I actually have to leave soon, so I'm actually almost hoping that they'll take me out here. I mean, a tremendous trade, really nice. And you see how there is no need to trade, no multiple contracts, over leverage. In all those instruments, all these trades, I only traded one contract, and one contract is enough. If you have a solid methodology, one contract is enough, even though according to my own rules, giving the account size I have, the amount of drawdown I have available, I can trade a heck of a lot more than one contract, but I'm not, because there is no need to. Because all you need is one instrument to give you a nice move to make your day. All right, looks like they will take me out here. You know, the shame of it is, I mean, I do have to leave, but okay, they took me out. But actually, this is just a test of the former support, right? So support becomes resistance. I think they're gonna go substantially lower from here, but it is what it is. Great trade, great morning. And I'm gonna show you the rhythmic dashboard now with the alerts. All right, so this is my rhythmic dashboard with today's results. Again, this is a $150,000 account. Started the month of May with 160,100. As I always keep $10,000 after the payout as a cushion. And these buy-sell levels were posted last night, and this is what I traded this morning. I'm going to make more of an effort to try and trade all seven. Not always possible, but I will try and try and record what I can. But the same thing really happens every day to a different degree, but the same thing, right? So draw the buy and the sell levels. I draw the midway point. And then below the midway point, you're looking to get short. Above the midway point, you're looking to get long toward the sell or the buy level, depending on where price is in relation to these levels. And that's pretty much, I mean, that's all I do. I mean, there was nothing complicated here. Simply draw on your charts. I always tell the group members, draw on your charts, because the more you see it, the more you will be convinced that this is for real. And then it's just a matter of how do you get long or how do you get short, and you just take the trades from there. At first, you just target a fixed amount until you are past the trailing drawdown. And after that, as you grow your account, you can try and hold positions. And there is no need to trade multiple contracts and over leverage yourself, which could present an issue if the market moves against you. And as we all know, it's a matter of time before market moves against you. It happens every day. And so if you're not over leveraging, you are definitely reducing the chance of you blowing an account or having a loss so big that it might take you a while to recover. So that's it. Once again, all our information is in the description. Get in touch if you have any questions, and best of luck.